Johnson & Johnson reported earnings last week and also dropped a little bit of a bombshell on us regarding the distribution of Kenvue shares. So I want to walk through that, update you on the techniques around that and the technical stuff around it so that you'll understand better how this Johnson & Johnson Kenvue distribution is going to work. Also, I've been looking at a stock lately, and I want to share that with you, some of my thoughts around that. It's one that I haven't really heard about a lot, so I wanted to share that with you, see if it's something that you would want on your due diligence list moving forward. So we got a lot to cover, so let's get started. Hey guys, welcome back. Kevin Burgess back again with another video. I'm excited to be here with you. We've got a lot to cover today. It's not going to be a long video, but there's a lot of meat in it. So I want to go ahead and get into that so that we can talk through about this Johnson & Johnson disclosure around how they're going to handle the Kenvue shares. And then also about CME, Chicago Mercantile Exchange, which is a company that I've been looking at over the past few days. And I wanted to share what I'm seeing there and seeing if it's something that you might want to be looking at as well for your portfolio. So if you've not been a part of this channel before, my name is Kevin Burgess. I've been involved in public reporting of public company financial statements for quite some time now and finished my career in internal audit and corporate risk. So I have a unique perspective, I think, on some of the information that comes out from companies. So I wanted to share my thoughts and give you an update on Johnson & Johnson. But before I get started, if you like this kind of information, consider subscribing to the channel. I'd love to have you along for the journey. So let's take a look at the 8K that was released by Johnson & Johnson last week. You can see here that they reported their second quarter 2023 results. They were pretty decent results, but you can get those anywhere. I'm not going to walk through those results. What I want to point out and what I want to talk about for a little bit is this one sentence which says Johnson & Johnson intends to split off, in quotes, Kenvue shares through an exchange offer as the form of its next step in the separation, subject to market conditions. So it's a pretty short sentence, but it gives us a pretty good flavor of what they're planning to do with the Kenvue shares. Up until this point, I've been expecting it to be a spinoff, not a split off. So in a spinoff, basically every shareholder would get a certain allocation of Kenvue shares. And so therefore you would end up owning both companies. You would then own your original shares of Johnson & Johnson, and then you would have additional shares of Kenvue. You may or may not want those shares of Kenvue, or you may or may not want the shares of Johnson & Johnson, but you have them both. That's a spinoff. In a split off, the investor gets to choose who they're going to move forward with. And so that's point number one, is that the investor now has a choice to make. And that is whether you're going to have Johnson & Johnson or Kenvue or both. So you'll have the opportunity to tell the company whether you want to convert all of your Johnson & Johnson shares into Kenvue shares, or if you want to convert some of your Johnson & Johnson shares into Kenvue shares, or if you want to convert none of your Johnson & Johnson shares into Kenvue shares. So at the end of the day, why is this important? It's important because the shareholders who will now be owning parts of those two companies, Johnson & Johnson and Kenvue, will have made the choice. So it's not like there's going to be these distribution of shares and then a lot of trading back and forth because somebody wanted Kenvue versus Johnson & Johnson and vice versa. You're going to be able to choose which company you want. But here's the kicker. The company will determine the ratio at which that conversion takes place. So the point of that is there is no way that we can know how many shares of Kenvue would be given for every share of Johnson & Johnson until we hear more from the company. So the point is there is a lot of gray area here, and we don't know enough information to be able to even fathom a decision around whether we keep Johnson & Johnson, Kenvue, or both. But also something to keep in mind that theoretically, if all of this works perfectly, then the value of Johnson & Johnson shares will not be diluted by this distribution of shares. So I wish I had more information for you. I wish I was able to say, here's what the value is going to be, but there is just not enough information yet. So the update is there is more to come. There was one other thing that was said on the earnings call, which it said, and I think it was a CFO that said, it could happen in the coming days. So it may actually happen a little before we thought. So be looking forward to something. If you're a J&J shareholder, look forward to something from them regarding this split off of shares. And hopefully that helps. If not, leave me a question in the comments below. I'll try to address each one. So I just wanted to pass that update on to you, and then also talk a little bit about a stock that I've been looking at. And that stock is called CME Group. It stands for Chicago Mercantile Exchange. And as you can see on the screen here, the CME Group has a dividend safety score of 96, and their dividend yield is 2.32%. But don't tune me out right away, because there is something about this dividend yield that's a little misleading. I want to talk about that. Let's move down here to their growth. They have been growing. Their latest growth of dividend was 10%. Over the last 5 years, they've averaged a growth of 9%. And over the last 10 years, they've averaged 8%. You can see this chart up and to the right, which is a beautiful, beautiful chart. So now let's talk about this dividend yield a bit. You can notice here that the recent and upcoming payouts, they've gone from, 2020, they were at 85 cents. 2021, they were 90 cents. 2022, they were $1, and 2023, they're $1.10. Those are the numbers that get us that 2.32% yield. However, each year the company pays out a special dividend, and that special dividend this past year was $4.50. So it was their dividend for the whole year was $4. So it was more than the original dividend for all 4 quarters. Now, what I like about that is it allows the company then to do special payouts based on the performance of the company. So there is a set amount that they will pay out, which is that 2.32%. But each year we get a kicker, and just so happens that the kicker here pushes the yield for CME up around 5%. So I'm kind of excited about that. I think it gives the company management some flexibility, and so I'm really looking hard at this particular stock. Let's take a look at some of the numbers here. We have an earnings payout ratio that's in the 50% range. Now, I will say that this 50% payout is based on the total dividend distribution, which would include the special payout. So this earnings payout ratio includes all of the dividends that were paid. You can see that the free cash flow payout ratio is also looking good at about less than 50%. I like to shoot for something less than 60%. So this is actually very, it's in my wheelhouse here. Earnings per share up and to the right, that's what we like. Return on invested capital is a little bit low for my liking. It's about 8%. But I'll tell you, that's really about the only thing that is causing me some caution at the moment. Operating margin is around 60%. Free cash flow margin is up, in the 40s, 50s percent. Net debt to capital is 0.08, and their interest coverage is up around 19. So they seem to have some pretty good metrics here. Let's move on then to look at CME Group from Morningstar's perspective. Morningstar has them fair valued at $215. Their last close was around $190. So they are about at a 12% discount to Morningstar's value. Morningstar has them with an economic moat that is wide, and also an exemplary capital allocation process. So to give you a sense for what CME does, they operate contract markets for the trading of futures and options on futures contracts worldwide. And basically what this means is they are an exchange that handles transactions for futures and options, not only for interest rates, but equity indexes, foreign exchanges, agricultural commodities, energy, metals, fixed income, foreign currency trading services, and they're even beginning to add a bit of Bitcoin into their program as well. They also provide clearinghouse services where they clear, settle, and guarantee these contracts. And then lastly, they've begun to offer a wide range of market data. And so this is a part of their growth engine, actually, is their ability to give data, which would include real time as well as historical data. And Morningstar says we see the company's strong competitive advantages, allowing the firm to earn excess returns on capital for the foreseeable future. So I'm not going to go too deep into this on this particular video. I am in the process of reading their 8K. I need to listen to a couple of earnings calls. The reason that I wanted to put this on this video, even if I'm not quite ready to pull the trigger on it, is because they release earnings on Wednesday, July the 26th. So if you are interested in that, I'm kind of thinking, and we'll see if this comes true, right? So I'll put this out there, and then let's see how it works. But I'm thinking that because of all of the increases in interest rates, that we're going to see a lot higher volumes on their exchange, which is going to drive their revenues higher in the second quarter. So I'm expecting them to have a pretty decent second quarter. Whether that has any impact on the stock price or not, is really anybody's guess. It might already be priced in, or it might only be seen as a blip in the future. But I do believe that they should have a pretty decent second quarter. So I wanted to pass that along to you. If it's something that you're interested in, take a look at it. Make sure it's right for your portfolio. I'm not a financial planning professional, so you have to do your own due diligence and your own research. But at the end of the day, it's something that I'm looking at for my portfolio. So I wanted to share that with you just in case it would be something that might fit into yours. So I just wanted to give you a quick video today about an update on Johnson & Johnson and this particular stock that I'm looking at. Hopefully this has been helpful, and I'm glad you're here on this channel with me as we try to work through stocks that we want to invest in. So with that, I'm going to see you on the next video.